Good morning. It's 11:05 a.m. Do you know where your home equity is? Welcome to the Velocity of Money. Here now to answer your questions about real estate, capital, equity, funding, and finance, your host of the Velocity of Money, Michael J. Barnes.
So it doesn't matter if it's a $100,000 property or a $500,000 property. The cost to the lender is $50,000 on average nationally.
Essentially, yeah.
So the idea of this upside down scenario, you may see banks be more willing to entertain a broader audience of loan modifications or a broader request of loan modifications based on the fact that they know that those now what we're calling toxic assets not only exist on their balance sheets, but they want to do something to avoid the additional cost of foreclosing on properties, to avoid the additional impact to our economy nationally with all these foreclosures mounting. So a loan modification may, while that may not be the case or the best ideal candidate today,
Right.
Don't throw the option completely out of the window.
No, and here, to that point, I would never tell a homeowner to stop making their mortgage payments to just so they can get a good loan modification. Because right now, today, this is today. This isn't 3 weeks ago. Okay, and this may not be 3 months from now. As of today, your servicer is not going to entertain loan modification unless you're late in most cases. Here's the situation, though. At first, you may get pissed off at that. People do, quite frankly, and they're mad at me for it. But the reality of it is what we have right now is a real problem, and lots of people that are 2, 3, 4 months behind on their mortgages. This loan modification, we're jumping into their business, we're getting the attorney involved, and getting right in front of the asset managers or the attorneys for the lenders, the servicers, to get these foreclosures proceedings stopped. They will absolutely, I'm certain that in the future, and probably even in the foreseeable future, they're going to allow people that are not late yet to do these loan modifications. Now, hold on. I said I would never tell a homeowner not to make their mortgage payment to do a loan modification. The other thing I would never tell a homeowner to do, and I mean never, ever, ever tell a homeowner to do, is take money out of your 401k to make your mortgage payment because you can't go forward. There are other stops in place. If you don't make your mortgage payment because you're having tough times, you're going to get a loan modification. I talked to a guy the other day that had a 23-year, huge six-figure income. He lost his job. Big, huge firm here in town. He's probably listening to the program right now. This guy drained his entire 401k, and I mean a big one, just to make his mortgage payment.
And the average 401k participant investor, they don't understand the ramification of what that is. Just because your company's plan allows you to take a loan against a 401k, for example, doesn't mean it's the right thing to do. There are ramifications beyond the scope of our time in this discussion regarding that decision. Loan modification first. If you're taking money from a 401k to make a house payment, you are not only inefficient in creating the velocity of money, you're costing yourselves in penalties, taxes, a number of different ways. That is something that we can be certainly forthright about discussing with anyone that wants to call 1-888-MOD-INFO for information.
Yeah, and in this particular consumer's case, it's just heart-wrenching. This poor guy used up every bit of his 401k to make his mortgage payment because his lender told him no, no, no. Well, his lender told him no 3 different times because you're not late, we're not going to help you. Well, he wasn't going to allow that to happen. Unfortunately, knowing what he knows now, he probably would have looked at it a little bit differently. A loan modification isn't for someone, if you don't have any income at all, the investor, the servicer, the bank that holds your mortgage, they're not willing to do a loan modification because you don't have the means to pay for
Even if it's a modified loan, you still can't make the payment.
Modified. Right. In some cases, if you have significant cash reserves, maybe, but I've not seen one of those done.
Yeah, that wouldn't be the ideal candidate. Describe a little bit about who should be doing this loan modification, and I know we're getting close to a break here again. But people need to know that this option exists. They're hearing all these different concepts in the news, and they're hearing the media spin about Hank Paulson and what the Treasury's doing, and they're hearing about this bailout package and what that represents, and now they're hearing that that money's not going to be used to buy back bad mortgage assets. So what does that do to the underlying holder of that mortgage, the owner of that house?
Well, it's pretty scary for the majority of them. The loan modification, the lenders are getting very aggressive when it's being forced with a potential lawsuit, or being addressed by an attorney, or receiving a subpoena in regard to a specific loan case. They're paying attention to that, and those are the people that are going to be getting the best options at this time. Those are the ones that are working the best.
Somebody feeling this economic pressure, they may be behind on a mortgage payment or two, maybe three. What do they need to do? What's step one?
Call 1-888-MOD-INFO. That's 1-888-MOD-INFO, or go to modificationhotline.com, and we'll be back in just a few moments.